Welcome to Coffee and Crypto with Lee and Jimmy. I am Lee Reiners, joined as always by Jimmy Lenz. Jimmy, how you doing today?
Man, I am doing great. A brisk fall morning out there. It is. This is North Carolina at its finest. I love this kind of weather. Go out. It's high 30s, low 40s. Leaves are crisp, and it just feels great outside. It feels like the holidays are almost with us. That's what it feels like.
Oh man, you're going there, huh?
Yeah,
Well, every year, you know how it is. The Christmas stuff gets trotted out sooner and sooner.
it does.
You know, it's almost as if Thanksgiving doesn't exist
Well,
anymore.
it's funny. The Christmas parade in Raleigh is next Saturday. So
What? Before
before
Thanksgiving?
before Thanksgiving, even. Yeah, yeah. And
I
they're
don't know
saying,
how.
well, Thanksgiving's late. It's like I think Thanksgiving is kind of the same time every year. I mean, I know on the calendar it's a little bit later, but still. But yeah, my Kim will be with the Salvation Army in the Christmas parade, so we have to plan for those things.
Oh, that's right. Yeah, a big time of year in your household for
Oh yeah,
sure.
oh yeah, really
Ringing
busy
ringing
for
them,
Kim.
ringing them bells, getting
Ringing
that
the
money in the
bells. If you
kettles.
guys
Yep.
see those kettles, you're helping out a lot of folks. But
Great
yeah, Kim
organ,
is
great
all over that.
organization.
Yeah.
Awesome, man.
Um,
Well, let's
so
um
lots of
let's
stuff
dive
going
in.
on. Yeah,
Lots of stuff going on.
including a story just this morning. I don't know if you want to start there, but um,
Yeah, let's start. Let's start. Stablecoins, right?
stable coins.
And look, I was in DC last week. So last Thursday, I participated in a panel at the Federalist Society's annual Lawyers Conference,
How'd you like
and
that annual lawyers conference? How'd you like
it
that?
was good, man. It was
Was it?
good. I mean, the Federalist Society, I think most folks are familiar with them. They are sort of a staple of the conservative legal movement. And, essentially all conservative lawyers, certainly all conservatives on the Supreme Court, are members of the Federalist Society. The Federalist Society has chapters in pretty much every law school in the country. So obviously, they lean conservative. It's not my normal crowd, I'll put it that way. But I appreciated the invite, and they said that when they invited me that they strive for ideological diversity at their events. So I think I was a diversity addition, Jimmy, to this panel. But
That's
diversity
got
in
to
the
be a first for you.
well, yeah, I mean diversity in the I guess the traditional sense of thought, right? So
Yeah, diversity of
um,
thought.
s- yeah, so it was interesting. So it was all about stable coins and kind of reflecting on the Genius Act. And Paul Graywall, the general counsel of Coinbase, was there, as well as the president, Brandon Milhorn, the president of the Conference of State Bank Supervisors. And obviously he was a big supporter of federalism and the dual banking system and
Sure.
preserving a role for the states and whatnot. And we did talk about kind of the direction of travel for stablecoins, right? And if stablecoins grow, okay, where is that growth going to come from? Okay, and that brings,
It only got
yeah,
come from very, very limited sources, right? I mean, we know that. I mean, there are only so many caches of information, caches of cash out there, and so there are very limited places. They can come from deposits, or they can come from deposits. Possibly they could come from something like money market funds, but people aren't going to
yeah,
jump out of a yield to go into something that doesn't have a yield. And so I really don't see that
yeah,
occurring. I mean, deposits are the likely place. And it seems like everybody's talking about this. We've seen, some prognostications from the BIS. We've seen some from Treasury Department. Scott Bessent talked about it a few weeks ago. And then this morning, the FT's own Jillian Tett wrote a big piece on stablecoins. I don't know if you had a chance to take a look at it or not yet.
I did. I did. Well, I actually had sent you a link to the Myron speech
Yep.
that she was referencing. So she
Yep.
she, she was basically Jillian Tett, great FT columnist. I think folks are familiar with her. She essentially was summarizing a speech that Stephen Myron, the newest addition to the board of governors at the Fed, gave last week
Yep.
in New York. And his speech was trying to sort of suss out the impact of stablecoin growth or potential stablecoin growth on monetary policy.
Yep.
Okay. And we've talked about the impact of stablecoin growth on like credit intermediation, right? Because if the growth is coming out of bank deposits, okay, and then going into treasuries, okay, then that is going to then restrict, of course, banks' ability to provide credit to the real
Yeah.
economy. and especially if that growth is coming from community banks, that could have knock-on impacts. Is the point I made on the panel
Sure.
on small business lending and agricultural lending, because community banks do a disproportionate amount of lending to those into those segments. Um, and so this is kind of building off of that type of analysis. And essentially, his main point is that demand for stablecoins is not going to come from within the U.S. It's going to come from abroad, right? That was his main point. It's going to come from countries that have a history of inflation, that
Right.
have capital
And we've already seen
controls,
this. We're already
that don't have
we've already seen
that
this.
don't have established
Yeah.
banking systems, right? And so that in essence is going to create what he says a new supply of loanable funds, right? So it's going to be, the growth is going to come from non-dollar assets, right?
Right.
Essentially. Okay. And so he says, well, look, if we're going to drive up the demand, so he kind of has a 1 to 3 trillion baseline growth in stablecoin market cap
Right.
by 2030, right? He's kind of taking the median of some various
Probably the
estimates
median.
out
Yeah.
there.
Median to low.
And like right now,
Yeah.
we're looking at, I think, like roughly dollar-backed stablecoins, roughly 300 billion, give or take a little bit
A
there.
little over 300. Yeah.
So he's saying, look, we can reasonably expect by 2030 there will be between 1 and 3 trillion dollars in stablecoins outstanding. Most of that growth is going to come from abroad. That's going to increase demand for treasury securities, and thereby it's going to increase the supply of what he calls loanable funds.
Right.
And that is going to, of course, push down borrowing costs for the U.S. government. And he argues it's going to potentially put long-term downward pressure on an interest rate known as R star, right?
Right.
And for those who don't know, R star is kind of a theoretical interest rate. It's called the neutral rate. So it's the policy interest rate that neither stimulates nor restricts economic activity.
Right.
And so I forget how many basis points he thinks it pushes down R
I think
star
it was
by. 40 basis points. And so if you think that neutral interest rate is going to be lower because of the growth in stablecoins, then that means that you should lower, right, the Fed funds rate, the target rate now. And so that's the setup here, folks. Curious your thoughts, Jimmy. I'll add this final note because Myron was a bit of a controversial pick when he got added to the board of governors because he had previously been an economic advisor to President Trump, and he wasn't like resigning from that position. He was basically taking leave,
right.
because he was filling a term that was going to that I think expires in January. So we don't know if he's going to stay on there long term. And at his very first vote on the committee last month, I think, he clearly wanted to lower rates more than 25 basis points. I think he wanted like a 50 basis point cut.
Yeah, he wanted 50.
Right. So so part of me is thinking, okay, is this speech just sort of a rationalization for why, like to move the policy rate to where he wants it, and where clearly President Trump wants it, and he is close with President Trump?
I don't think it is. I mean, I gotta say, no,
All right.
Reed Timsio and I wrote that paper, published that paper a month ago, which, by the way, it seems like Gillian Tett used a lot of our stuff, but didn't cite us, which was kind of disappointing.
I've had that issue with other FT columnists, by the way.
Yeah. I mean, this is not the first time this happened with the FT, but be that as it may, I think that it's, kind of the way he talks about it, the scenario that he paints. I think there's demand for stablecoins in the U.S. I mean, we've seen it, right? There's $300 billion there, and a lot of that's domestic. But I do agree that this is a really good way, easy way for people who are in the economic conditions that he mentioned in the speech. And we've seen this before, when countries, massive inflation hits or, some sort of political turmoil, people do turn to crypto really quick. Rather than, crypto that has some kind of volatility, wouldn't you rather have something U.S. denominated? So it's a stable currency that's not going to fluctuate. It's like, this is the best of all worlds for these folks. And if you can get your hands on it, they will. I think this could become the new a new safe haven. People have always said gold and things like that. Stablecoins, they're going to be the new safe haven. And will they drive down interest rates? They have to. I mean, we talked about it before. There's a limited pool of assets that stablecoins can invest in, right? They look a lot like money market funds, and money market funds aren't going anywhere, folks. They're going to be here. So the
Yeah.
demand's going to increase almost assuredly. And when demand increases, what has to happen? The yields have to fall. Prices are going to increase. Yields are going to fall. Now, it's anybody's guess how much. And I asked the question on LinkedIn this morning. It's like, have we already started seeing this? I don't know, but I would
Yeah.
say, there's a chance we're already starting to see this demand start to push down yields a little bit.
Yeah.
Yeah,
No, it's a fair point. It's a great question to ask. And look, I think we are kind of on the verge of seeing a number of academic papers probably that's going to analyze this question, right? Because it's like a relatively
probably.
new thing. So I'm sure there's PhD economists out there chipping away at this question now, and something that'll be studied for years to come here. Um, Look, this administration, and especially Treasury Secretary Scott Bessent, he is very focused on the yield curve,
Yeah,
and
as he
essentially,
should be, as he should be. That should be a primary
yeah.
objective.
Well, look, and obviously the elephant in the room is 30 trillion plus in federal debt
In
outstanding,
debt.
right?
Yeah, yeah,
Um, and um, and that's obviously a concern, right? It's quite high. The debt to GDP ratio is close to 100%. If it hasn't
yep.
passed 100%, the highest level we've seen in this country since World War II, when we obviously had to spend heavily to win that war. And the question is, well, how sustainable is that? Is that going to be inflationary and increase yields across the curve? And so, he is actively sort of trying to engage in yield curve management. So just on the issuance front, which is actually criticized Secretary Yellen previously, and he's doing the exact same thing. So he's sort of managing to the front end, so
Mhm.
issuing more bills to fund our deficit. And they're also clearly using regulatory policy as a way to juice demand for treasuries as well. I mean, you've heard them talk quite explicitly, Bessent and others in the administration, about the Genius Act would create a new source of demand for
Right,
treasury securities. I mean, this is one of their arguments on behalf of the bill. Another context for my world, bank regulation is the enhanced supplementary leverage ratio, which is a capital requirement applicable to the systemically important banks in this
right.
country
The big
and
banks. Yeah,
the big banks. And there's a proposal out to sort of refine that, to essentially lower that requirement. And one of the stated goals is that would free up bank balance sheet capacity to deal in treasuries, right? So I think, look, I have some kind of concerns with sort of using regulatory policy as a way to address our unsustainable debt burden, right? Like let's go the direct route of like getting it under control.
getting well.
But I think it is something to just consider when we talk about these issues, right? Because
But
it's
don't you
all
think
it's all related, man.
at this stage, getting it under control is, I mean, I think a lot of that is going to be, I don't want to say manipulating interest rates, but using interest rates to our advantage. I mean, I think that we have to consider everything. I mean, $30 trillion is like a lot of money, folks. That's just
You think?
you're not going to you're not going to get that back by making payments every 2 weeks, like you do in a mortgage.
No, no, yeah,
It's not gonna happen that way. So I would say, you need to have someone that's fairly aggressive about using all tools at hand. As an American who plans on being here for quite some time, I mean, I would love to see the debt burden dropped significantly, and for
sure,
my kids and
yeah, yeah.
for future generations, I would love to see them not saddled with that, because right now we're on a bad track. We're on a really bad track.
Yeah, and I think the question is, will the bond vigilantes ever show up, right?
Yeah,
And it's the old James Carville quip, right? When he dies, he wants to be reincarnated as the bond market because you can
yeah,
you can force people to do whatever you want. So yeah, so interesting paper. We'll put a link to or speech, I guess, to
yeah.
Myron's speech. But he's clearly saying, look, stable coins and the growth in stable coins are a reason to lower interest rates, right? To have a
Yeah,
more accommodative monetary policy because that R star, that neutral rate, is going to be
I
lower.
think so.
So okay, I don't, I'll reserve judgment on that one. All right, Jimmy, I want to pivot to a story that is not necessarily a crypto story, but I think it could be become a crypto story, specifically a stablecoin story. And so I'm talking about the announced settlement Visa and MasterCard and large merchants. Okay. Now, the settlement hasn't been finalized. I think it still has to be approved by a judge, but this is litigation that has been ongoing for a long, long time, 20 years, folks.
Yeah, a
Okay.
lot. That is a long time. Even
That is
even
a,
even in judicial terms, that's a long time.
Yes, exactly. And so, this is the dispute about swipe fees, essentially interchange
Yep.
fees.
Yep.
Okay, and we all know. So, I think the average Visa and Mastercard, the average interchange fee is between 2 and 2.5% of the purchase amount. And the merchants have been complaining about this for a long time. Okay,
Yeah.
and so
I mean,
there's
how
been
many merchants?
litigation.
So I'm gonna interrupt for just a second.
Go ahead.
How often do you see, in particular on purchases of any kind of size, where they're actually adding that back into your fees, 3.5% fee? How often? I see it a
Uh,
lot.
I don't think I see it a lot actually.
Really, when I'm
Mm-mm.
doing services, in particular, so you want to use a credit card with your plumber, they almost always will add, and maybe don't even look at it, 3%, three and a half
Oh
percent.
yeah, yeah. No, okay. So that's I think for yeah, I mean we've had like some trees removed and
Yeah,
landscaping. And so for like kind of
as
sort
I
of
say, for bigger purchases.
yeah, I think for bigger sole proprietor purchases, they will give you a discount. So they don't kind of frame it as like an add-on. They frame it
No,
as
a
like
discount for cash.
yeah,
Yeah,
a discount for checks, right? Which is
yeah,
crazy. Like, so if you do, work on your house, there's a good chance that you actually will send a check. Um, so yeah, no, it's a good point, Jimmy. So anyway, so the settlement would essentially allow merchants, okay, to reject certain types of credit cards, specifically those, popular rewards cards, those generous
mhm.
rewards cards, because those are the ones that tend to have higher swipe fees, right? Because the swipe fees, the interchange fees, is what's funding your
Your
rewards,
your
right? Be it
reward,
airline
sure.
miles or whatever it may be. And so previously, the card agreements that the merchants were required to sign to accept Visa or Mastercard said, "Look, you have to reject all, you have to accept all Visa cards, okay, and you have to accept all Mastercards too." Now they're giving them some flexibility within some ranges, right? So they're basically lumping in. There's three broad categories of cards, okay. And so the question is, well, what impact will this have on card usage? And potentially, back to our show, Jimmy, could this fuel growth in stablecoins, perhaps?
Yeah,
Right?
yeah.
Um, look, the point
I
of
mean,
one of
you
the
and I have
points,
talked
yeah.
about this before, that stable coins likely will be issued by banks, and what are they going to do? They can't pay out yield, but they can give discounts. And I mean, you and I talked about this months ago, at
Yeah,
least months ago, maybe a year ago,
for
that
sure.
banks were likely to be issuing their own stable coins. We're seeing that in coming to fruition now. And while they can't offer yield, they can offer preferential
Yeah.
rebates and things like that, for discounts, and which is essentially the same thing, right? And I mean, yeah, it's going to happen. I mean, there's
I don't
absolutely no,
know.
people are too
I
used to
don't
this
know.
now. People want something. I mean, how often do you hear about people chasing different deals on credit cards? I mean, you and I probably wouldn't do
Well,
it, but if but I hear people in like their 20s, early 30s chasing those deals. Yeah,
Well, yeah, it's funny because the Wall Street Journal had an article this week about people who have like multiple like rewards cards, like
yeah,
tracking like a spreadsheet. Because it's like you get more points for certain types of purchases and different unique benefits. And if you have more than one of these cards, like it is kind of hard to keep track of it all.
yeah,
And so one of the points that I made last week on the Federal Society panel was that consumer payment behavior in the U.S. is very sticky. People love their rewards cards,
yeah.
and
They're not going to give those up easily.
Chase just announced that the annual fee on their kind of popular reward card, the Sapphire Reserve card, is going to go up to $795 per year.
You
Right?
have one of those, right?
I do, but I'm sorry, Chase, but not going to pay that. So
Yeah,
I'm canceling that card. Um, and so anyway, people are willing to pay almost $800 just to use a
yeah.
credit card. Now,
Just
presumably they're
just to,
getting rewards
yeah.
that exceed that, but I don't think most
I should
people are
hope
taking
so.
full advantage of it. And so, why would someone want to give that up for a stable coin that is not FDIC insured, does not have fraud protection, can't be reversed like credit card
Right.
transactions, right? Doesn't offer yield or rewards. Okay. So I just, at the time, I was just like, I just don't see this happening in the US at least, right? And we've talked about where I kind of
Yeah.
agree with Myron. If there's growth, it's going to come from abroad. But now if we have the settlement, if people start having their cards rejected or not usable
Can you
at
see that
certain
actually
merchants,
happening? You going
no,
into a
because look,
store,
the merchants
merchants aren't
follow
going to
the
do that.
customers. Well, the
Yeah.
merchants follow the customers.
Yep.
Okay. The merchants follow the customer. So look, you don't want to piss off your customer. If all of
Nope.
a sudden your customer comes in and pulls out their Delta Amex or their Chase Sapphire Reserve, and the merchant says, "Sorry, we don't accept that," people are going to be pissed.
No,
Okay,
absolutely.
people are going to be pissed, and I think they could potentially take their business elsewhere,
Oh,
right?
well, especially
So
if you're doing stuff
I'm
online where it's so
skeptical,
much
but
easier.
if it becomes the case that your card is not as accepted as it used to be, or it's quite clear that you are paying more for using a certain type of card, then I think that could change consumer behavior. I don't think it's gonna happen, but like I'm open to that possibility here. And so I don't know
Yeah.
how significant the settlement will be. I mean, I know, remember the National Realtors had that settlement,
Yeah.
and I don't think that really changed much, in terms of the seller sort of paying the buyer's agent and whatnot.
Right.
It doesn't appear as though that's really made much of an impact. So this could be a nothing
Yeah.
burger, as they say, but it's something to keep an eye on, man. Especially if it's,
I think we should definitely keep an eye on it. I think I think it could make I think it could make a pretty significant difference.
all right, moving on, Jimmy. And this is a story that I was hesitant to add to the mix today, but I decided to add it just to remind our listeners how smart and prescient we are. Okay,
Yeah.
in case you needed a little reminder. Sometimes you might be wondering, "Gosh, these idiots, what are they talking about?" So we have talked in the past about digital asset treasury companies, right,
Yep.
or DATs as they
At,
are known,
at length, we have talked about this.
at length. And a few months ago, I think we kind of had set our final piece on the issue, right? So those of you who don't know, and this was it all got started by MicroStrategy, now Strategy, and over the past couple of years, excluding this year, but the past 2 years or so, I mean, they were the best performing stock, in the entire stock market. Okay,
Yeah.
and obviously, success like that generates copycats. And for those who don't know, Strategy, issues stock. They issue preferred stock. They issue convertible debt, and they plow those proceeds into Bitcoin. Okay.
Yep.
And for the longest time, the market was valuing the Bitcoin held by Strategy at more than the price of Bitcoin on the spot market, right? So this gave rise to something called, multiple of NAV, MNAV, as the industry refers to it, right? So the
Yep.
multiple of the company's Bitcoin, over what it's worth in the market. And we just said, look, this is not sustainable. This cannot go on forever. Eventually, the laws of financial gravity will apply here. And it turns out, Jimmy, we were right.
We were
All right.
right again.
Yep.
I,
So,
I almost get
yeah,
tired of being right, Lee.
I can see it on your face, man. I
I
know you
know.
need it.
I
Yeah,
mean,
it's
yeah,
hard
but
on
it
you.
was so obvious. You and I, we talked about this, and it was like so damn obvious. Like, how can people not see this?
Yeah.
It just and maybe it's the perspective that we come from. I mean, we're not in industry, deep in industry, and we do think about things in a little bit different way, maybe. And maybe we just think about things in at greater length. But this seemed like it was just a push. It was just a gimme, right?
Yeah. Yeah, no, it did. I think it was inevitable. And look, and so we talked about the trade, and this is what Jim Chanos ended up doing, legendary short seller, right? So the trade was buy Bitcoin and short Strategy,
Right.
right? Because essentially that's Strategy's own trade, right? They're selling equity, right? They're issuing equity, so they're selling their own stock and plowing those and taking those proceeds to buy Bitcoin.
Yep.
So, mirror that trade. And that's exactly what he did. And that is what's happened. So, Strategy is down significantly on the year. I don't have the exact number on, but I think it's, down 40% or
That's pretty
something.
significant. Yeah.
And look, we've seen a broader sell-off in crypto markets, as we've seen the sell-off in kind of some of the AI tech stocks of the last week. But Bitcoin pierced at 100,000, resistance level, which, it's every time it kind of got close there over the past, several weeks, it would go back up. Now it's sort of breached that that level. And I don't know what the floor is, but we're seeing the prices of some of these treasury companies go down faster than the
Yeah.
price of crypto. And so
Yeah.
some of the like the ETH treasury
As they
companies,
should, as they should,
as they
right?
should. And
You
so the
know,
question is, will strategy be forced to sell Bitcoin?
yeah.
Right. And they're one of the largest holders of Bitcoin out there. Probably, I think they're the largest holder of Bitcoin out there.
Well,
And will they be forced? Yeah, who knows?
yeah,
Well, Satoshi, I don't know. They have more than
yeah.
Satoshi, I think.
Satoshi, yeah.
Yeah. So will that? And then if they sell, what impact will that have
What
on the
impact does it
price of
have on the
Bitcoin?
marketplace? Yeah,
Yeah.
yeah.
So
But you know, this was
yeah,
just it was such a to me a kind of a gimme trade. Being able to think about this, and it's like anything else. It's if you look at a company and you think about the management and fees and all those kinds of things, and then you look at the underlying holding assets of the company. There's got to be some rationale for that. And I mean, this was valued, significantly, greater than the only asset basically they held. And
yeah.
you have expenses and things like that on top of it. So, why would you ever do that? Why would you ever think that was going to last? I can't figure it
And I
out.
think there was like a moment in time where like it kind of made like a little sense because like we didn't have ETFs, right?
Yep.
So there weren't a lot of like vehicles that institutional investors could get
Yeah.
crypto exposure in, and so obviously a publicly traded stock might have been attractive, but now we have lots of there's a gazillion ETFs,
There's
right?
a
There's
lot.
lots of different
There's so many ETFs out there
there's
now.
lots of different options, and these companies are just not as attractive as they may have once been. So I don't anticipate us talking about this story again unless one of these companies just flat out fails, which I wouldn't rule out
Yeah,
of
I don't know
the.
about failing. I could see them being acquired, or maybe one of these companies. I don't know about an outright failure, but I could see some of these companies being
Yeah, I mean,
possibly
look, at the
being
end of the
acquired.
day, if the stock is worth less than the value of the Bitcoin, then I think you are
Yeah.
attractive target for sure. Right. All right, Jimmy. Let's move on. Have you heard of something called the CeFi Mullet or DeFi Mullet? I think it's called the DeFi Mullet.
The DeFi Mullet. No, I think I had one of those in like
Yeah,
in the late
you might.
80s. Yeah, I
Yeah,
think
I
I had
bet you
one.
look good with the DeFi. So the
Yeah.
DeFi mullet is right. So a mullet, right? What do they say about mullets, right?
Business in
Business
the
in the
front,
front,
party in the back.
party in the back. All right, you get where I'm going with this, right? So the DeFi mullet is you have a centralized intermediary in the front, okay, and then you have a DeFi protocol in the back, baby. All
Yep.
right, so that's the DeFi mullet, folks, and I raise that because that is essentially what Coinbase is doing with their Bitcoin backed loan. Okay.
Yeah.
So let's say you're a Coinbase customer and you have a lot of Bitcoin and you want some liquidity for that, right? Maybe you want to put a new addition on the house, go on vacation, whatever it is. So Coinbase is now facilitating, and they've been doing this for a while.
I was gonna
In
say
different
this isn't new. They've been
and
doing this
different,
for a
it
little
isn't
while.
new, but I think the arrangement is relatively new.
Yeah.
And so, so you can pledge your Bitcoin and get USDC. Okay,
Yep.
right is how it works. Conversely, if you have USDC on Coinbase, you can put that in a liquidity pool and get some yield,
Yeah.
right? So you can provide liquidity to these lending protocols. And so the way it's working is that Coinbase is essentially plugging into a DeFi protocol called Morpho. Okay.
Hmm.
So on Morpho's platform, customers can post Bitcoin as collateral for loans in USDC, or they can deposit USDC into Morpho to earn yield. And this is kind of controversial because in the U.S., lenders are required to abide by know your customer and anti-money laundering regulations, right? And certainly Coinbase is complying with those regulations as it pertains to their direct customers. Okay,
Right.
but once their customers, assets move on to Morpho, right? The other counterparties on Morpho are not being KYC'd AML because Morpho is ostensibly a DeFi protocol. And so I think this is naturally raising a bunch of concerns, particularly as it comes to the market structure bill and like what to do about DeFi there. Because look, if you include these generous DeFi carve outs, stuff like this is going to become more prevalent and prominent. And the centralized exchanges are going to take advantage of some of like if they can say something's DeFi not subject to regulation, then that's what they're going to do. So
Yeah.
I think folks in DC need to kind of study this stuff a little bit more and take a pause on some of this market structure legislation to understand the full
Yeah.
implications here.
I
But
mean,
Jimmy,
I
I come back to what you said, and I'll turn it over to you after this. But
okay.
you always say this, and I always agree with you, which is, where is the yield coming from, folks?
Yeah.
Right? And
Yeah.
if it sounds too good to be true, it probably is.
Probably is. I mean, if you look at, and we talk about rates a lot, and we talk about the influence of like stable coins on rates and how things are. But if you look at the overarching rates, if you're getting some sort of outrageous size yield on something, it's like, where's it coming from?
Yeah.
Somebody has to be paying that for somebody else to be getting it, or
Hmm.
it's simply a Ponzi scheme, or there's something that you're not seeing. There aren't very many options here, and so I'm a fan of understanding. And when people say, "Well, it's very complicated, you just don't understand," probably run away from it. Don't even watch. Run away from it. I've found in the in the past
Yeah.
that's
A
usually the
good rule
best.
to live by.
I think so. I really do
Yeah.
think so, because I hear that a lot. And it's usually, guys who it's like, yeah, this guy isn't that smart, and he's telling me, I just don't understand. It's like, yeah, I think I do understand perfectly. That's the problem. So yeah,
Well,
I worry about those things.
yeah, and I made this point on the panel because, right, the big debate, post Genius is like this, the so-called payment on interest loophole, right, where
Yeah.
the issuer can't pay interest, but like third parties, can pay interest. And I said, look, some of these yield bearing products, I don't know where the yield is actually coming from.
Yeah.
And we've seen this movie before, right, in 2022 with Celsius and BlockFi and Gemini Earned, right, and Voyager, right? So, like, are we just replaying the same, movie
It
here?
seems like people fall for these things constantly, Lee. I don't know the details here, but it's they never work out. If you look at
Yeah.
prevailing rates on things, unless you're invested in something that is very risky,
Mm-hmm.
and then you would expect to get a yield that is commensurate with the risk that you're taking. If people say, "Oh, you're going to earn 12% in this riskless investment," how?
Yeah.
How exactly are you going to do that? Well, you don't understand the math. It's like, really? I pretty much do understand it. So
Do you
I'm
remember Alex Mashinsky,
yeah.
Celsius CEO?
Yep. Yep.
Right? Um, so during the
Yep.
pandemic, I was on a virtual panel with him, hosted by Johns Hopkins University, right? And this was like at the time when like you were still like having like panels about like what is crypto and like is it worth anything, right? Like we
Yeah.
don't,
Yeah.
we don't kind of do those anymore, thank God.
No, no, we don't
Um,
do those.
yeah, but so anyway, I was like, oh, it's Johns Hopkins. This is reputable, obviously university, and so Mashinsky was on the panel, and I didn't really know anything. Like normally, I do actually a good amount of research on like fellow panelists if I don't know them before I go on. But for whatever reason, I didn't do a lot of research on him. And he shows up, and he's wearing that T-shirt that says "Banks are not your friends," right?
Yeah.
And he's going on and on about how awful banks are and how they don't give you anything, and users deserve to make their money work for them, this or that. And I kind of we kind of got into it a little bit on the panel. It's all out there, folks. All you can things like Great Talks Inc. is the name of the series.
Hmm.
And and so anyway, I just left that kind of with like a bad taste in my mouth about this guy. And it's so funny because like the other week I was looking on YouTube where the video is, and like the comments, there's not a lot of comments, but there's some comments, and the comments were kind of closer to like the event, and after the event happened, and it was like all the comments were like, Lee was so nasty to Alex. Like, why was, all this stuff. And turns out, right, he was a fraudster and now he's in jail. All right.
Yeah.
So,
Yeah.
just another reminder. We're smart and we know what we're
Hey,
talking about.
we really, it's funny. I wonder if somebody went back, because we do have a lot of regular listeners. If somebody went back and looked at kind of all the prognostications that we've made, I'll bet we've been pretty much on the money about 85% of the time
I think that's
about these
fair.
things. And we'll say stuff that a lot of people are just not going to say, right? I mean, other people are thinking it, but nobody's going to say it. I mean, we've been pretty out front with, in particular, some of our S1 reviews and things like that.
Mm-hmm.
And they've kind of come to pass, folks. I'm just
That's
saying,
right. That's right.
we've been pretty spot on these things. In fact, I probably in the past 3 or 4 months, Lee, have had more comments about our S1 reviews than almost anything else we've talked about.
Wow.
People really like our S1 reviews.
All right.
Which, when we did the first one, we thought, are people going to be bored to death with these? Obviously not, because they're asking for more.
Who knows? Okay. Well, we hear you, folks. We got to get on it. Those require a little more prep on our end.
A
And
little more time, yeah.
yeah, a little more prep on our end, which is why we don't do them as often. But we hear you, and we're gonna add some more to the mix here, folks. So Jimmy, look, a lot of fun as always, right?
As
Always good to
always,
as always, we like to remind folks that we know what we're talking about, okay? Because I
we
know
do
sometimes it may
kinda
not come
sometimes.
across that way, right? But look forward to doing this again with you next week, my friend.
Absolutely. Hey, have a great weekend, Lee.